Coming up in this show, I'm going to bring you my comments on the markets. Arby has a sample for you of our Future Speak show, a great cycle analysis lesson on silver, which has turned short-term negative. I'm going to bring you an update on gold, following silver to the downside. And then you're going to see our special membership, level 4 membership, with 3 months of our new market condition monitor included. Unbelievable opportunity. And I'm going to bring you my analysis on the S&P 500. Plus, you get a look at the best and worst symbols that we have right now looking at our market condition monitor. We'll look at 1 to 5 week view of the stock market.
Well, I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone gliding, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market spent the early part of the week in the same narrow range we've seen for the last couple of weeks as investors waited for news on the debt ceiling, which seemed at an impasse. That changed on Wednesday as both President Biden and McCarthy took default off the table, saying that wouldn't happen. Also helping the S&P move up 50 points on the day was Western Alliance. That stock moves up 10%, leads the regional banks on the upside as they said deposits actually went up by $2 billion. And that led the Russell on a rebound. Thursday, the market continued on the upside as tech stocks roared, and that was led by the semiconductors. All of these hoping that the AI craze that's going on right now is going to boost earnings significantly. AMD, Micron, those are up about 4%, NVIDIA up about 5%. Netflix was a big gainer, up 9%, as they said they have 5 million users in their ad-supported tier, and that is much better than what was expected. So the S&P 500 tacks on another 40 points, and on that day, the Nasdaq up 1 3/4 points on the day. That was a 245-point gain on Thursday. Friday, here we are early in the day, a bit of a flip-flop from what we've seen as the techs are a little bit weaker than the market, and that makes sense. Some of these valuations have gotten to bubble levels, but still, here on Friday, the market is very firm. The stock market did break out of that diamond consolidation that we were showing, now moving back up to that resistance. S&P's up around 4,200. We'll cover that analysis in a few minutes, and we have expected, and we said this last week, and go review it if you need to do so, that the short term looked like what we were going to see is that we were going to get some downside and then get a little bit of a lift, and then the market move down again in just the short term, which we still think is going to happen, and then move up again into late summer with 4,300 as our target. It is interesting that the NASDAQ already hit our target for 23, and that's helped certainly by the AI craze. Analysts are talking about outrageous margins on the likes of NVIDIA. This stock is trading right now at a PE of 180. If you look at a forward PE, that forward PE based on extremely optimistic earnings is at about 80, looking out past 2024. 80 PE, that shows the intensity of this AI bubble craze that's going on. And no doubt AI is world changing, and these stocks are way ahead of themselves. With the stock market not likely to peak for months, in our opinion, because of these crazy valuations that we see in the tech stocks, we think there's a rotation ahead. We'll look for the relative strength in the NASDAQ to weaken and choppy markets ahead. Oh, that debt ceiling? Well, I'm looking for no deal, but more can kicking. If you listen to both sides, they are really very, very far apart, but they don't want to default. So they're probably going to say that they're going to keep working on this and going to just kick this can down the road for a brief period of time. That's probably going to bring the pullback that we're looking for with some investor disappointment. Remember, we think that a pullback is going to be a buying opportunity, and we'll talk more about that in a moment. Also, it's important to note that everything is not great looking ahead because the government used up all its resources. They're going to need to sell 500 or 600 billion in T-bills pretty soon to build up those reserves again, and that is going to be a drain on liquidity, a drain on the economy. And that is a pretty big issue going forward. That's part of why we believe that the market is going to be in a rockier, choppier period right now. But again, we're not looking for any big downside yet. It's just too early in these patterns, and we are looking for higher prices into late summer. For the week, the stock market, well, you had NASDAQ big up about 4.5% so far here early on Friday morning. There were also gains about 2%. S&P 500 just over 1%. And the Dow Jones Industrial Average up less than 1%. So Dow stocks lagging. Bond market got crushed. 30 years down about 3.5 points. The 10-year yields up 24 basis points, trading up around 3.70. Now that is really in a resistance area, in the area that we consider, at least for the short term, a futures being a buy. In other words, yields being at a sell area. So we don't think yields are going to go up a lot more here at all. Gold, that was just absolutely crushed, $50 on the week. That was led the previous week by the silver market, which got crushed the previous week. Silver down about 30 cents more this week. The dollar up 0.6%. That is in resistance as it slowly moves to the upside. Oil, it gains $2.90, and that is in resistance. And we think the next couple of weeks are down in the oil market as it is in a spot where there really doesn't look like a lot of upside. You want to get all of our analysis on these indexes and all of these commodities that we look at, 24 different commodities. Make sure you watch Future Speak every week. That's for members, levels 2, 3, and 4. Make sure that you go to askSlim.com and explore. You want to get acquainted, become a level 1 member. It's an unbelievably low price for a ton of information every single day. On YouTube, subscribe to the channel, click on notification bell, like the video, and you do that by giving it a thumbs up. On Twitter, follow me at askSlim. Any questions on everything we're going to show you in here, please write to Matt at askSlim.com. All of our education and analysis, he's got all the information you need. All right, RV, who is our just absolutely master in cycle analysis, is going to bring you the analysis on silver. We've been cautious on this, talking about that. He's going to bring you that analysis. And remember, you can always get our analysis in Future Speak by becoming a level 2, 3, or 4 member. That's what Future Speak is. And this is a sample of that show and some great analysis. And I'm going to follow up on this in just a few minutes when you see this.
If we go ahead and shift over to silver, you'll see something that is quite a bit weaker and has in all likelihood formed its cycle high. Let's pull up the weekly chart. You can see this very large failure, which in all likelihood, as I said, marks the highs for this intermediate term cycle right there. There's a low that's due 717 to 911, and we are looking for only lower highs and lower lows and for this to turn back to the downside. So that is the overall look here in silver. We did see a failure as we got into that zone from 25 72 up to 27, 28. And you can see once you see a bar like this, along with this turn down right here, that does raise the odds that you're entering into this intermediate term corrective period with both of these cycles pushing here on the downside. If we go ahead and shift over to the daily chart, this is that now left-hand translation. We had our first close below a prior cycle low right here at 2474, and this happened on 5/11. After that, this is doing exactly what a left-hand translation should do, which is that we've now held below this old level at 2474, and we've now turned red on the slim ribbon that needs to hold red, and we would only look for bear flags to form and moves back on the downside. This low is due towards the later part of May into the early part of June. And on the downside, we have levels from 2322 to 2245 or so. And it's quite reasonable to move down at least to that 2322 area into the end of May. So the overall bias in the short term is firmly negative, only looking for bear flags and then resolutions back on the downside. Now, in terms of our levels, these are falling as price makes new lows, but they come in 24.75 to 25.07. We don't want to see it through that 61.8 at this point at 25.39 here in the silver market.
That was great work, Harvey. Now we're going to take a look at something very much in line with this. This is a hot minute in gold, and you saw Harvey's great work in the silver market, where gold followed silver and has become short-term negative as the dollar restored positive momentum. Let's take a quick look at the chart here in the gold market, and you can see in here what's happened is that gold rallied, gave that sell signal, which we warned our members about, created this very weak left-hand translation, which is a brief rally in these upside rising areas of the cycle, and then turning down and breaking down. That creates these resistance zones right over there, which are sell zones for a rally, which is likely to come beginning in about a week. It's in a support area now on the weekly, which is likely to keep prices from falling too much further on the downside. We'll have a downside target here of about 1925, but that may take way to the end of this cycle to get there. We'll look for declining prices for about another week, an attempted rally into this area right over there, closer to 2000, and then moving to the downside again. We showed the dollar momentum last time we did this when gold still looked positive and the dollar momentum was negative. That has now changed in here and flip-flopped as the dollar has done better. Here you could see right over here the dollar momentum has turned positive. When that happens, like right over here, gold is generally moving to the downside. When you have negative momentum in the dollar, as you see here, gold is moving to the upside. Well, here's that positive momentum right there, as you see in the dollar. I'll just zoom in right over here, and the falling gold market there. That does not bode well for the gold market. Right now, money is moving out of the metals and out of areas of safety, and then into things like AI tech stocks, pushing up that NASDAQ index. While that may be temporary, when you look at this right now, the gold and silver markets have some weeks ahead of them of a challenge. This is a changed condition, and our analysis has also changed. As we always want to do, keep you updated. That is our hot minute in the gold market. This is our special of the week, and this is amazing. This is for first-time subscribers and upgrades. This is the first time we've ever done this. You're going to get the first for the first 3 months level 4 membership, 35% off. That's only $303.75, $101 a month. That's regular $159. Now, what's so special about this is that if you take this special, you're going to get our new MCM, that is our market condition monitor, completely free for the next 3 months. No strings attached. You're not going to get charged again for the MCM. you're going to get this for 3 months and get this just amazing app that will help you so much in understanding the markets. And I'm going to show you more about that in a few minutes. This is a one-time use. You want to learn more about it, write to Matt at askSlim.com. This is just a little snapshot here, the screenshot of the MCM, and you're going to see throughout the show some more information on this. You can actually, in this, just toggle to your a trading style right in here, whether you're a short-term trader or intermediate or near-term, just a little swing trader for a few days, or you're a intraday scalper. All of the information in here. This features our next level proprietary momentum analysis technology. All of our algorithms are built into this, and what you get is a trade setup condition that you can scroll on in here. There's 114 symbols, and of course all of the indexes, all of the widely held. And I'm going to give you some information on what the conditions are in the widely held a little bit later in the show. So you're going to like that. And then a change log. Every time something changes in the style of a trader you are, that information comes up right over there. Sign up for the new level 4 membership and enjoy the premium version of the MCM completely free for the next 3 months. That no strings attached to that. You could just look at it, and it's absolutely going to be no additional cost to you just to get that. So this offer is only valid through May 28th, so that you have to take advantage of this now. So what else is included in this? Well, for our level 4 members, they get our multiple time frame charts. All of the work that I do and Arvi does on the 84 best traded symbols. You can import and save those and view them live with all of our work on the Thinkorswim platform. Yes, you need the Thinkorswim platform to get those live charts. If you are a lover of our proprietary studies, you're also going to get the Slim Ribbon PO, Reversal Scout, Market Condition Indicator, Option Bias Indicator, and more. These are our own indicators, and they are fantastic, and the people that have these absolutely love them. You can view them on the Thinkorswim platform. You're going to get our Thinkorswim grid archive. These are custom charts that our level 4 plus members have asked, and you'll be able to see all the archive on that analysis. You're going to get our support resources, free webinars, chart analysis training. You'll be able to come to our askSlim lives and be able to ask questions, and then come on Discord where you'll have our analysts all on there really helping you. Best practices for utilizing the custom charts and studies. It's just so much information and so much ability to connect with us on there. That full membership is going to give you access to the Market Condition Monitor, fantastic new app, premium version of that, and everything that we have in level 3, 2, and 1. I'd have to spend another 15 minutes with you just pointing to the bullet points on what's included in there. Go to our website and click Learn More at the top, and you will be able to see everything that's in there. It's just no other site has got this level of information. It's our goal to make you a better trader. If you are better, if you are successful, then we're successful. That's all we want, is for you to be super successful. You can get this special for level 4, 35% off, just $303.75. That's $101 a month versus $159 a month. And you're getting that MCM. Amazing. Any questions, write to Matt at askSlim.com. All right, stock market. We're going to take a look at that. Before we do, please do read this slide. It tells you about some information about our analytic approach, and it's very important that you do read this. All right, stock market, S&P 500, 1 to 5 week view is really what we're going to look at here. And then I'm going to use the MCM, the Market Condition Monitor, and show you what the best and worst symbols are, what the conditions are right now, because that's so important for understanding the stock market. So you're going to like it. We're going to use the MCM live, and that's really, I think, going to be great information. Let's take a look as we just switch over right now and look at the S&P 500. That's what we're looking at right now is the SPX. I see this chart slipped over a little bit, so let me just get this in here so it's lined up a little better, and you'll be able to see these charts. You probably want to see the dates that are on the bottom. Let me just fix that right there. Sometimes this just slips around, and I want to make sure that you're seeing the full chart here and all of the numbers. There you go. So what are we looking at here? We're looking at a daily chart. Again, we're always looking at cycle analysis. And let's just take a look here. You can see the very, very pretty symbol cycles that are in there. Remember, cycle brackets are on the bottom. I'll go over what I said last week in a moment, but I want you to again to see the cyclical patterns that are in here. These are the big harmonic families that are right in there, a 52-day dominant cycle, and then there's the intermediate and the minor 13-day cycle that's in there right at that point. And you can see as I zoom in here in this last cycle right in here how that shaped up. Let me just get right in here because this is all important information right up over there. So what we talked about last week was that there was a minor cycle right in here that was bottoming, and it was likely that the pattern was going to be a week up, a couple of weeks down, and then turn up again. That's what we believed. Now, we noted that was a diamond formation right in here, and diamonds are kind of neutral consolidation patterns that we had drawn in there, and that means it could break in either direction. I thought there was a possibility that it would stop over here, complete the diamond and break on the downside, and not get as much upward intensity as it did right here. But it's proved to be strong as there was tons of buying in the NASDAQ that was leading it to the upside, and that gave you the diamond breakout. Still, what's happening right now is that on the weekly charts, especially in the Russell and in the stocks 50 FEZ, those all have corrective periods right in here. They're likely to pull down. And with the NASDAQ getting so crazy on the upside, that's likely to go into at least a negative relative strength and help the market to move back into a correction. Now, because of the breakout right in here and getting up a little bit into that 4,200 level, which was right now it's 4,207, which we thought would be the level around 4,200 that would be able to stop it. Right now it's 4,208 right now while I'm doing this, and that is an area that should be tough for it here on the upside. So we have, because of this breakout right over here of that pattern in this rising phase right over here, we then upgraded the downside because the time is shorter and it's coming from a higher level. So what we're looking for is a pullback, which we thought would be potentially down over to this level right around 4,000, now pulling back here to around 40.50 or 40.60, and then getting ready where all three of these cycles are moving up again. You see right here where all three were moving up right here, and then the market was strong. That's why you see these projections in here. We all along have talked about later in the summer as when we think the highs for the year would come. Everything that we're looking at is bullish, and I'm going to show you the market condition monitor. You'll be able to see that in just a few minutes, and that is going to, give you a good sense for the conditions that they've been. Here you have the slim ribbon PO on the bottom and the slim ribbon right over here. These are positive and green as they've been right in here. So the upside is not a big surprise to us right in there. We are looking for a corrective period in here and consider this to be a buying opportunity were that to come. I do believe that it's going to be the NASDAQ that helps lead this correction in here. This is pointing out to around the first week of June. The correction out in the NASDAQ and the FEZ points more to mid-June. So there may be a lot of choppy action right in here. and then moving up again. So you can see in here, as I just pull this down a little bit more, that these resistances, this thick zone right over here, takes you, this is around 42 and a quarter, and this is around 42.67 right there. So these are all kind of tough spots for it. And then right over here, that major from the weekly at around 43.60 is our most optimistic upside projection that you can see here, with that 4,300 level, which was actually our upside projection for the year. Now, the NASDAQ did make the upside projection already. We were looking for 13.6, and now we have upgraded that, and our members will see those upgrades on the charts that was sent to them this morning for level 4. Level 3 members will also see it posted in there, and even level 2 and level 1 will see those updates also as they come out in the stock index report that Matt does every single day for level 1 members. So you'll see all of that. Again, we've upgraded this. We're still looking for a pullback in there, and then we are looking for this bigger upside out over here right there. Again, last week we said up for a week, down for a couple of weeks, and then up again. That was your up for the week, and a breakout that we saw of that diamond pattern. That was certainly a bullish pattern. And you can see that we have no reason not to still be bullish. So that's a very good look at the stock market, just looking for about a week or week and a half to the downside, a buying opportunity. Now, this is actually very important to look at if you really want to understand what is likely to move in the markets, what's been moving. So watch it. With the market jumping the way it did the last couple of days, I wanted to take a look at the market sectors, the widely held stocks, the ETFs, and of course the indexes, and get a sense for which are the strongest and which are the weakness. And the best way to do this is using our market condition monitor. We're going to take a review here of the widely helds, and you will see the MCM in action. I think this is really important, and you get a great idea of what the conditions of the market is right here. Let's take a look here as we look at this market condition monitor. And right now, what I'm looking at here is the trader version. Now, there are different ways that you could look at this, depending on what trading style that you are. And you see this is set to short term, and it could be intermediate or near term or intraday, depending on what you want to look at. I specifically want to look at the short term because what that looks at is the algorithms based on weekly, daily, and 2-hour charts, because this is the kind of swing trader type of setup, and also for option traders. So I think it's very important. What I want you to see right over here, as we're looking at the short term, you can see the SPY, the QQQ, the IWM, the DIA, and those, of course, have been bullish. And the QQQ turned very bullish from bullish back on May 15th. And the SPY went from bullish to very bullish also on May 17th. So they were bullish, they went to very bullish. And even the IWM now has turned to bullish, and that was neutral and even bearish a while again. And you can see the Dow Jones is a laggard right in there. What I want to do is really look at what the strength and weakness is, and I think this will give you a good idea. And over right here is the change log. And every time in this particular trader style, something changes in the 114 symbols that are in here, in these widely held and ETFs and commodity ETFs, that changes here, and you see that on the right. So this is just a great tool. What I want to do is I want to look at these trade setup conditions right in here, right there, and I'm going to click on that. We're going to take a look at what the most bullish are, and I'll just scroll down through here, and you'll get an idea. So there's I'm going to switch to where it says only very bullish, and you can see in there Apple, Uber, IYT, transportations, SPY, Netflix, XHB. Those are the ones that are very bullish condition right now. Visa, Toll, CRM, UAL, Microsoft, Amazon, Micron, big leader on the upside with NVIDIA, and you can see that. And they were bullish and turned to very bullish 3 days ago on May 15th. Really good indications there. XLK, Meta, QQQ, XLC, the communications, Google, Oracle, and EWJ. Those are the ones that are in very bullish condition right there. And they, a lot of them have been there for a while. You could see Google turned very bullish on May 9th, Oracle very bullish on May 8th. So these things have been bullish, and some of them went from bullish to very bullish, as you can see. Let's take a look at the ones that are in bearish, very bearish condition. As you can see, there's wheat. We've been really negative on wheat. We showed that in the commodities in Future Speak all the time. And of course, the oil CVX is very bearish. T-Mobile, that's very bearish also. And of course, the golds have turned down. You see Newmont very bearish, corn very bearish. Amgen looking very bearish. We'll keep scrolling down. You see the market's moving up, but everything isn't very bullish. This happens to be the bond market, TLT, and that has now turned very bearish. Pfizer and soybeans, which we've been reporting as very bearish. Also, you see GLD right over there, gold, is bearish, and that turned bearish actually today from neutral condition, actually yesterday, 518. So that gives you a great idea of how you can really use this and get a great sense of the condition of the market. So that's what you can look at. Another way to do it is you can look at the time frame version right over here, and you can see that you can look at 2-hour or monthly all the way down to 3 minutes right there. And we'll just stay on the daily chart right over here, looking at the daily time frames, and you can see right in there that IWM is neutral. That has improved there, and see that Dow Jones is still bearish on the short term right over there. So, and you can go all the way down in here and see the condition of every one of these. If I click on SPY, which is something we all want to see, then it shows you each of the different time frames in there, and you can see that that's on the weekly turned bullish on April 4th at that point, and that's when it turned green, the daily on May 5th there, and then the reversals got caught up on May 17th, and the 2-hour, 15-minute, and then all the way down to the 3-minute in here. So if you were a really short-term trader, you would then be using the 3-minute, the 15-minute, really be helpful. So this is just a great tool, and you can see how important it is to really understand the conditions of the market. Again, I'm going to go back to the trader version right over here, and then you can just pick the style of trader that you are. If you happen to be a very short-term swing trader, you're going to use the near-term information, and you can see in here that on a near term, the stock market was bullish and very bullish throughout the near term, which would be, just several days type swing trade that you might be doing. So good idea. This is a good example of how to really use this market condition monitor and really have a great sense for the condition of the market. I hope that you found that valuable and that you actually decide that you'd like to use the market condition monitor. And for those of you that have it already and haven't been using it, that gives you an idea of the value of it and how you can be using it. That is the MCM, the market condition monitor, only available at askSlim.com. You get a great sense now for the market condition monitor and the conditions in those groups, and how this has really helped to understand what was going to be leading on the upside there. So that's the MCM, and make sure you have the opportunity to use this MCM on your own. Become a level 4 member, and you're going to be able to get this for free, the market condition monitor for the next 3 months, and you won't be charged again for that for the market condition monitor, because that is free. There's no strings attached to that at all. If you do subscribe to level 4, that will have a renewal on there, but you will then be able to cancel it if you don't want to stay or you want to downgrade from there. So there's lots of opportunities for you. We're very flexible with that. So do take advantage of this great special that we have coming, that we have right now. Go to askSlim.com and click Learn More up on the top, and you'll get all the information. You get everything in levels 4, 3, 2, and 1. It's the most information you will ever see from a trading website. Fantastic. And my team does an amazing job. And all we care about is you doing better. Your success is our success. This is everything that is included. And do click Learn More up on the askSlim website. All right, that's it. Please go to our website. You can get acquainted by just becoming a level 1 member. Subscribe to our channel on YouTube. Click that notification bell. You'll know when we put videos up. And do like the video. Watch our member videos in the playlists there, and you'll get a lot of information about who we are and what we do. On Twitter, follow at askSlim, and any information that you need from us regarding everything that we've shared and how you can become a member, and even what membership is the best fit for you, write to Matt at askSlim.com. That's it. I want you to be so careful because it is so crazy out there, and I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a study.